Hello, welcome to this Crypto Professor introduction to a statistical concept called correlation. Now, correlation sounds very scary, but all it means is that the relationship between two different things, okay? And we can give this relationship a numerical value of between -1 and +1 depending on the strength of that relationship, with 0 being no relationship whatsoever, okay? So the more positive the relationship, the more plus it is, the stronger those two variables move with each other, and the weaker it is, towards the -1 end, the less they move in each other. Okay, so I'm going to use this video to assess some cryptocurrencies and assess the relationship between the two of them, which one helps you to define opportunities for growth because you can buy cryptocurrencies that have a strong correlation but are cheaper in price. And you can also assess the underlying risk to your portfolio because if one cryptocurrency starts moving down, which is highly correlated with the other, you know that you're likely to have a sell-off of sorts. Okay, but first of all, I want to define in very simple terms what I mean by this correlation. Okay, so here we have 3 different colored lines and 1 black line. The black line represents the amount of coffee that I typically drink in one day. Okay, so if I start in the morning and I drink lots of coffee, okay, and then if I tail off towards the afternoon, and then maybe if I'm flagging towards the evening, I'll drink some more. Okay, this red line represents the need for me to go to the bathroom. Okay, so the higher the black line, the more I drink, the more I need to go to the bathroom. If I start to tail off, then I don't need it anymore. And then if I start drinking again, etc. Okay, so they would be known as very highly correlated. Okay, the more liquid I ingest, the more I need to go to the bathroom. The blue line here represents a 0 correlation. Okay, so again, with the black line representing the amount of coffee I drink, this is the number of blades of grass in my garden. Okay, no relationship whatsoever. They are entirely what's known as mutually exclusive. Okay, the green line here represents my alertness levels or tiredness levels. Okay, so right here, the more I drink, the less tired I feel. Okay, if I stop drinking, I might start to feel a little bit more tired again. Okay, and then if I start drinking again, my tiredness level will decrease. Okay, so that's inversely correlated. So that has a -1 association. Okay, so we can actually track any variable using a correlation coefficient. Okay, so in cryptocurrency terms, the example of a 0 correlation is BTC against the price of diamonds. Okay, practically no correlation there. There might be a very, very small one, but no one's really watching that for any degree of technical analysis. Then we've got an example of a highly positive correlation, BTC and Ethereum, 0.98. Practically whenever Bitcoin moves up, Ethereum moves up, and vice versa. When Bitcoin moves down, Ethereum also moves down, and also Ethereum, if it moves up, BTC goes up with it, etc. Okay, I would say that BTC is actually leading that correlation in this instance. And then we have an example of a highly negative correlation, such as Serum and Yearn Finance. That is actually a -0.68 correlation. Okay, so they're quite inversely correlated. So when Yearn Finance goes up, Serum goes down, and vice versa. When Serum goes up, Yearn Finance goes down on average. So you can use these correlations to help you make more profit from highly correlated crypto projects. I will show you a graph a little bit later where I do this. And in effect, if you know the correlation coefficient, you only need to analyze BTC if it's highly correlated with BTC. For example, if I wanted to buy some Ethereum now, I would look at BTC rather than looking at Ethereum because I know that there's a 98% chance that I will know that if the price of Bitcoin moves down, Ethereum will also become cheaper as well. There is something also we need to remember throughout all of this. Correlation does not always equal causation, okay? So it's very quick. It's a very easy process to assume that just because Bitcoin moves up, other cryptocurrencies move up as well. But there can be other bits of news, and there can also be other things to think about the relationship purely than in statistical terms. For example, there are a number of spurious correlations. For example, more iPhones means more people die from falling downstairs. That is a very, very positive correlation, but obviously the actual underlying relationship is nonsense. Okay. Similarly, with this example, let's cheer on the team and we'll lose weight. There's a very negative correlation between those two, when in actual fact it's nonsense. And then once again, there's a very negative correlation here but they are moving together as well. And to increase auto sales, market trips to Universal Orlando. Okay, so obviously two things that are completely irrelevant to each other, but yet you can make the data look like there is a relationship between the two. We need to keep that in mind as we look at our correlations. Okay, now there is numerous things you can look at if you want to go more in depth with this. Okay, I'm just dealing with the surface level statistics today and just giving you an introduction to what's actually going on and how you can perhaps think a little bit more about correlations. The most numerous way that we actually encounter correlations in the market at the moment is when Bitcoin sells off and all our altcoins also go with it. Okay, that will be known as a correlation, a strong correlation. And at the moment, because the market is relatively small, albeit that it's grown considerably over the last year or so, a lot of crypto projects still are very, very much coupled to Bitcoin. Okay, there are numerous decouplings happening, okay, and there are rumbles of decouplings happening in the future, but at the moment the majority of crypto projects are very, very much tied to the price of Bitcoin. So if Bitcoin falls, other crypto projects also fall as well. Okay, so let's have a look a little bit about what that actually means. Okay, so this is a data provider, MicroAccess, who have charted every single cryptocurrency against every other cryptocurrency. Okay, and we can see ontology, for example, against uni, okay, has a minus 0.09 correlation over the past 2 years. Okay, we can actually go through all of these, quantum here. Okay, so if we want to analyze quantum against ZRX, we would go here and find it's actually got a positive 0.74 correlation, so quite highly correlated in that respect. Okay, and you actually go down here and find all sorts of different cryptocurrencies. Let's have a look at that one in particular there. So that is Link versus Remain, okay, a negative 0.58 correlation. Okay, and this can really help you to identify opportunities and risks within your portfolio. Okay, so for example, if you own a lot of Link, okay, and you want to help it grow, you can know that if Link starts selling off and you bought Remain, your portfolio would actually stay more or less the same because of the negative correlation. Okay, whereas if you bought and sold comp against Curve DAO token, you would know that there's a 0.78 correlation there. So therefore, if you sold it and both coins went up, you would be able to realize a loss there. Okay, so these correlations, all they mean is that the relationship between the two variables is as strong as it says here. Okay, and notice the number of green correlations here. Okay, they're usually quite interspersed with each other. Okay, there's a negative correlation here, Tezos versus Remain there. Okay, and you can actually spot some patterns in this. Okay, if I actually go on to a more short-term time frame, only 90 days, look at the number of greens here. Okay, there's a lot of green here. Every single cryptocurrency seems to be working along every single other cryptocurrency apart from this one, which is Pax Gold. Okay, obviously follows the price of gold and therefore has not very much of a correlation with any other crypto project. Okay, but if it's a crypto project, usually they do move in tandem with each other, particularly in the kind of semi-bull market that we're experiencing at the moment. Okay, that equals risk. Okay, because if Bitcoin starts to sell off, then all these cryptocurrencies will move in tandem with every other cryptocurrency. Okay, so the only way you can actually do benefit from that is to sell out into a stable coin or fiat. Okay, which is what a lot of people are doing at the moment with Tether. Okay, so this really gives you an idea of the relationship between different cryptocurrencies, and I would definitely recommend you look at your portfolio to assess where your current correlations lie. Okay, do you have a balanced portfolio of a mix of strongly correlated assets versus weakly correlated assets? Do you have some negatively correlated assets in there as well? For example, this is obviously a stable coin. Okay, so we've actually got negative correlations with most of these because obviously the prices are climbing on average, okay, over the last 3 months. So therefore there's a negative correlation here. Okay, there's actually not that many cryptocurrencies that actually have a negative correlation that aren't stable coins. Okay, there's a couple around here, Pancake Swap and Litecoin. Okay, so that has quite a weak correlation. Okay, but nothing negative if I'm just looking here, and obviously this varies on the time frame as well. Perhaps if I were to zoom out a little bit on the time frame element, we can actually see, yeah, here we go. Rivain versus Ren. Let's go a little bit further along to see if we can identify any others. Serum versus Stellar has a minus 0.31 correlation. Okay. Yeah, so have a look at your own portfolio and assess where the likelihood of opportunities lie. Okay. If we just looked at the strongest and the weakest, we can see that Ethereum and Bitcoin have a 0.98 correlation. Okay, what that means is whenever Bitcoin and Ethereum move, they move together very, very often. Okay, and if we look at the opposites, Yearn Finance and Serum, a minus 0.78 correlation. Okay, so whenever Yearn Finance moves up, Serum moves down, and vice versa. Okay. Now these are, you can spot these occasionally from charts, okay? And at the moment, we are at a 200-hour resistance on Bitcoin, okay? So we're currently testing higher to see whether we're going to break through to test this next resistance level at $52,000. And if we break that, then we'll continue on higher, okay? So if I had a portfolio of altcoins here, what would I do? Well, I'd probably start thinking about taking some profits off the table, just because we do look weak and we are at resistance on the Bitcoin chart. Okay, so any assets that I have that are highly correlated to Bitcoin, I would know that the chances are high that they will sell off if this resistance level holds, or they will climb higher if this resistance level is broken. Okay, so just by analyzing one chart, Bitcoin, obviously the market dominator, I can actually know what the majority of my portfolio is likely to do. So, for example, if I overlay CRO with Bitcoin, you can see that in actual fact, it's mirroring it to quite a high degree, okay? So we can actually see just from the charts that there is a relationship between CRO and BTC. And here we can actually see that the correlation is actually 0.67 between these two, okay? So that's quite a high degree of correlation between Crypto.com token and Bitcoin, okay? But it's nowhere near one of the highest. So if we actually now look at this correlation, we actually see it's not the highest just because of this volatility, okay? And obviously this volatility was caused last week by a number of fundamental changes, okay? But overall, the pattern does yield to each other, okay? There is a relationship between these two, and when Bitcoin sells off, you can kind of have a higher degree of volatility on a sell-off with CRO token, okay? And when Bitcoin climbs, CRO token will also climb, okay? Now, this is not just anything to do with CRO, it's actually just the entire market following each other. And obviously, you can trade CRO against Bitcoin as a pair as well. So here's an example of a very strong 0.98 relationship, okay, correlation, Bitcoin and Ethereum. Okay, Bitcoin being the chart here and Ethereum being this orange line here. Okay, and you obviously can see when Bitcoin sells off, Ethereum does so too. Okay, but obviously to a higher degree, and that's because the market cap is a little bit different. Okay, there are arguably a smaller number of people trading Ethereum than there are Bitcoin. Okay, so that means that when panic hits the market and we do see sells, they are more volatile and therefore more tradable. Okay. And there is an argument to a degree that the smaller amount of capital within a market makes for better trading opportunities up to a point, okay? So if you were to buy a strongly correlated asset with Bitcoin that was only 10 cents, for example, okay, and Bitcoin climbed, obviously the token that you are trading with will climb more dramatically. Okay, because it's highly correlated, and if it was a strong move from Bitcoin, it would be a strong move from the token as well. Okay, so viewing opportunities like this according to their correlation coefficients can actually make you more money than trading the actual asset that the correlation is with. Okay, now this is a chart of the S&P 500 against Bitcoin. Okay, and obviously back in March 2020, this time last year, we saw a drop for the S&P 500 as people panicked about their investments in the stock market due to coronavirus. We also had a very similar correlation drop with Bitcoin. Okay, It came a little bit later, okay, but nonetheless, there was a very strong correlation there, okay. We then had some form of recovery, but then the market, Bitcoin market, completely climbed and left the S&P 500 kind of behind, okay. That's not to say that the S&P 500 hasn't climbed, but the correlation is now a little bit weaker than it was back at the start of 2020, just because of the price movements. And if we can see that there, look at that massive difference between the S&P 500 in percentage terms and Bitcoin, okay, because we always had massive breakouts and a bull market for Bitcoin because of the various reasons for money printing, etc. Let's now look at a correlation that isn't as strong. In actual fact, it's negative. This is XRP against Celsius token, okay? And you can see naturally when we have spikes in Ripple or XRP, there is a corresponding drop in Celsius token, okay? I'm not quite sure why this would be. It might just be entirely random, okay? But they are starting to coalesce a little bit more. Celsius token obviously taking a little bit of a drop here, okay? And we obviously have Ripple with its narrative at the moment being obviously with the SEC and the investigations. Obviously, it's a little bit less fundamentally driven at the moment because of its various issues, whereas you might argue Celsius token is actually quite strongly fundamentally driven at the moment because obviously it has been climbing significantly and does have a very, very good project behind it, okay? So correlations can actually help you determine the fundamental perspective behind two different tokens, like this example, okay? The SEC is currently riled up with Ripple, okay, which, you know, obviously on paper is a very, very good and bullish token to have, but obviously if it stops being traded in the US, that's going to change things dramatically. Whereas Celsius token obviously has been on a huge bull run and is now at a resistance level and selling off slightly, so things are a little bit different, and you can tell that effectively behind the correlations between the two assets, okay. I hope you've enjoyed this video on correlations. As I say, this is an introduction to correlations. There are a number of different avenues you can pursue this if you want to get more in depth. I would encourage you to look at your correlations within your cryptocurrency portfolio, okay, and examine the relationship, particularly to Bitcoin, of each of your cryptocurrencies, okay. That way you know, if you just analyze Bitcoin, what your portfolio is likely to do, okay. And therefore you can actually have a higher degree of control, and it can actually help you determine when to take some profit, okay. With most cryptocurrencies at the moment, we are getting into profit taking territory, okay, where it's time to de-escalate your risk and, you know, look for other opportunities theoretically with smaller tokens, okay. And correlation coefficients can be one way of helping you to do that. If you have any comments or suggestions or any further tips or tricks that you use in order to help you determine when to take profits or when to utilize correlation coefficients, please leave suggestions in the comments below. But otherwise, I wish you all the best, and until the next video, happy trading. If you've enjoyed this video and would like to get $25 of CRO completely for free, please sign up to Crypto.com using our referral link in the description on this video. We also get $25 of CRO to keep this channel operating. The Crypto Professor likes feedback. If you've enjoyed this video, please don't forget to like it. If you'd like more of the same, please don't forget to subscribe. Or if you have questions, please post them in the comments and I'll endeavour to answer them for you. Thanks for watching.